Thank you so much, Ray, for your confirmation. So in today's live stream, I'm going to start by looking at the US dollar. So far, the US dollar is coming to my point of interest. Like I outlined yesterday, I'm looking at this inefficiency and also this gap to act as the next draw on liquidity. And so far, as you can see, price is coming to the inefficiency, mitigated it. So the only thing I'm looking forward to see now is if we're going to see a reaction from this key level, I would like to see a 15 minutes break of structure to the downside, like I outlined right here. And if I do not see this on the 15 minutes time frame and then continue to see a consistent move to the upside, price creating high highs and higher low, then most likely this low resistance liquidity right here might be the next run on liquidity. So we'll go to the 1 hour time frame and then we'll go to the 15 minutes time frame. And on the 15 minutes time frame, you can see how price is consistently creating higher high, higher low, a higher high, higher low, and then this higher high. So I'm watching this low right here to see if we're gonna break this low impulsively. If we impulsively break this low and then we see a retest, then most likely I'll be looking to see what the reaction is gonna look like on the USD XXX pair and the XXX USD pairs. So I mean, I'll be looking at the reaction on USD CAD, USD JPY, Euro US dollar, GBP US dollar to see whether they align as well and look for tradable opportunities. So that being said, we're going to look at Euro US dollar right away to see what price is doing so far on Euro US dollar. So for Euro US dollar, yesterday I talked about my analysis and key levels I'm watching and Euro US dollar. And right here, we'll have this inefficiency resting right here on Euro US dollar. And from my analysis, all I want to see from this key level is a 15 minutes break of structure. The reason for that is because if we go to the 4 hour time frame, we can see this is the point of interest as well. It aligns with the daily. So most likely I'd like to see between a 30 minutes break of structure and a 15 minutes break of structure. Any of the two can go for me personally. And so far you can see price created a low, created a high, created a low, and then right now we've broken structure on the 30 minutes time frame and I'm watching this. We can invert the chart to see whether this really looks like a break of structure swell for buys and for sells. And yes, it does look like a break of structure because we have this low and this high and then this violation of this low. So the next thing we're going to be waiting for is to confirm a break and close of this low. So I think dollar also has broken structure, which I'm also going to look at in a minute. So so as you can see right now, this is not yet a confirmed break of structure until we see a close below this key level. So I'm going to invert the chart again to the normal chart. So, and right there, as you can see, a high, a low, a break of structure. We'll go to the 15 minutes time frame. This right here was the last move to the downside before an expansion, the broke structure. All I want to see now is to wait for the 15 minutes candle to close bullish. Close above this high, most likely close above this position as well. Once I see that confirmed break of structure, the next thing I'll be waiting to see would be for price to gradually come into this position, and I'll be watching on the 3 minutes time frame. And if I do see a break of structure on the 3 minutes time frame, then I'll be looking for potential entries into the market. I'll be looking for a retest. I'll use the high as my entry. Stop loss this low, add an extra 3 pips to it. And then most likely, if we're bullish, then we expect price to continue going to the upside. So if this is supposed to be the low, add 3 extra pips, and that's going to be about 3 pips stop loss right here. So this is what I'm watching, and I'll be watching this very closely. Hopefully in the next 9 minutes, we're going to see a candle closure on 15 minutes time frame. And if that candle closure closes above this high, I'll most likely prefer it to close above this wicks as well. But even if it doesn't close above this wicks, I'll be watching to see when price comes in here. If we do come into this position and I see a break of structure on 3 minutes, I'm going to buy that. But if we do not close above this high, I'm just going to be on the sidelines, because it simply means that this could potentially be a run on liquidity, mitigating inefficiency, and price might be hunting for sell side liquidity. So that is what I'm watching on Euro US dollar. We're gonna look at the dollar as well to see what the dollar is doing. So for the dollar, as you can see, we've not broken structure yet on the dollar. As you can see, price came very close to the low, failed to break it, and we're seeing rejection. So I'm just gonna be on the sidelines for now. Another one we're going to look at is USD card as well, because I'm also looking forward to see if we can catch a sell on USD card. This is my point of interest. As you can see, we've been trending to the upside, creating higher high and higher low, and a higher high and higher low and higher high. We came down here, broke structure. This was the last impulse before dropping down to break structure. This was the overall last impulse move before dropping to break this structure. So this entire low, from this low to this high, is my range for my point of interest, where I'm looking forward to see a break of structure. If we're bearish and price is coming to that position, all I want to see is a potential break of structure on the 30 minutes time frame or 15 minutes time frame. And right here on 30 minutes time frame, we'll have a low, we'll have a high. Price failed to create a higher high, failed to create a lower low. So most likely we're just going to be on the sidelines. If we eventually see price drop lower to break this structure, then I'll wait to see a retest in here. If I do see a retest in there, I'll go to 4 minutes time frame and look for a break of structure on 4 minutes time frame. If I do see that, I'll use the low as my entry. Stop loss 3 pips above this key level, and I'm going to be selling this. So I need to see this exact thing right here. I need to see this concept on my chart for me to look for sales. If I don't see it, I'm just going to be on the sideline, and it simply means that my strategy is not presenting itself to me on the chart, and I'm going to do absolutely nothing. But if I do see this, then I'll be looking for a trade. So that is my analysis on USD card, and I'll be watching to see what the market is going to do. The next one we're going to look at is gold. So gold, yesterday I took a buy on gold, and price eventually reversed and went straight to the stop loss. My stop loss was resting right here. Price went straight to my stop loss. My take profit was here, went straight to my stop loss, took it, came very close to my take profit position, and then we're seeing this rejection. So sometimes this happens in trading, and there's not really anything you can do about it. All you just do is allow price to do its thing. We take wins, we take losses. It's all part of trading, and just like every business takes losses, and every business also has a time when they make profits as well. So in this case, it was quite unfortunate. Price went straight to the stop loss and then went straight to profit after taking the stop loss. So for now, I'm not really going to jump into gold yet. I'll just be watching it very closely. Because of how price reacted from this key level, this low is still suspect. We could still, for some reason, come down to take these lows. In as much as we took liquidity from here, and then we broke structure, we broke 5 minute structure right here. So I wouldn't be surprised if price came into this position and then continued higher. So I'll be watching that as well. If we do come into this position, I'll be watching it for a potential 3 minutes break of structure to the upside. If I do see that, I'm still going to take a buy. I'm still bullish on gold regardless. So the next one, we're going to look at British pound US dollar. So what I'm looking for to see in British pound US dollar. So far, you can see I outlined the inefficiency I'm watching on British pound US dollar, which is this key level, and price mitigated that position. I'm going to use a different chart for this. So as you can see, the inefficiency price mitigated that inefficiency. We'll go to the weekly, and on the weekly time frame, you can see right there inefficiency resting right here. We came into it, so I'm still bullish on GBP US dollar. If we're using our Fibonacci from this low to the high, we want to buy at discount, we want to sell at premium. And right here, you can see the inefficiency is resting at the discount position. Right there, resting at the discount position. So we'll scale down, we'll go to the daily time frame. On the daily time frame, we don't really have so much to work with besides this last down close candles. Define expansion, we'll go to 4-hour time frame. On the 4-hour time frame, you can see we have an inefficiency resting right there. This was the last down close candle, took liquidity, expansion, broke structure. So if we mitigate that position, we would like to see a 15 minutes break of structure from this key level. And so far, we've not confirmed the 15 minutes break of structure. We have a high right here. So I'm going to be watching this high closely to see if we're going to have a confirmed break of structure right here. If we do confirm a break of structure, then I'd like to see a retest, potential continuation to the upside, because I still remain bullish on GBP US dollar. So that is my analysis on GBP US dollar. We're going to look at Australian dollar as well. So the key level on AUD US dollar, I marked out this key level months ago. I talked about this key level so many times on the live stream. And right here is my point of interest on the Australian US dollar. I'm bullish on Australian US dollar. Right here, I wanted to see price mitigate that position. And right now, we're in there. We'll go to the 1-hour time frame to see if there's a confluence to that. And on the 1-hour time frame, you can see there's a confluence candle with our wicks inefficiency. So all I want to see is a 5 minutes break of structure once price is in my key level. And right here, this blue line is my point of interest. So we'll go to 5 minutes time frame. On the 5 minutes time frame, there isn't really any confirmed break of structure on the 5 minutes time frame. We have a high, we have a low. So we're still within the range. So if price drops lower to take this low and eventually break above the high, I'll take that as a break of structure on 5 minutes time frame. So until that happens, I'm going to be on the sidelines for Australian US dollar. But once I do confirm a 5 minutes break of structure on AUD US dollar, I'm looking for buys to take this to the upside, because I still remain bullish overall. And if we look at the bigger time frame perspective, like the 12-month time frame, you can see right here very clear as day, we created a high, created a low, and this is a solid break of structure. Price came back to a retest, mitigate the extreme discount, run on liquidity, inefficiency, a lot of confluence aligning with my bullish bias. So, and after that, we saw this heavy rejection to the upside. So I'm bullish on AUD US dollar. And if I do eventually catch a buy on this, it's going to be a swing trade, because most likely I'm expecting this high to get taken, price to mitigate the inefficiency, and also this low resistance liquidity is going to be my overall drawn liquidity, because we also have low resistance liquidity, low resistance liquidity, low resistance liquidity. It's just so much low resistance liquidity resting at the upside for AUD US dollar. So I'm just going to be watching this very closely, because if I do catch a buy on this, I'm just going to have to hold it for the long term. So that is my analysis on AUD US dollar. If you have any questions, feel free to drop it in the chat. We're going to be looking at the indices as well, because I'm also anticipating to get into a trade on the indices. So I'll use a plain chart. And right here is my analysis on indices. So you can see we'll have the inefficiency. I'll use this one. As you can see right here, I'll wipe the chart clean. We'll have this inefficiency resting right there, which is my very first point of interest on the monthly time frame. We scale down to the weekly time frame, and on the weekly time frame, you can see this was the last down close candle before an expansion to create all-time high. We'll go to the daily time frame. On the daily time frame, we have all this liquidity resting right here, low resistance liquidity resting right here, and we do have inefficiency resting right here, and we do have this last down close candle went to the downside, took liquidity from here, from here, from here, from this level, took liquidity, expanded higher. So the moment price came into this position, all I'm anticipating to see is a break of structure. Let me wipe my chart for a second to see if price also mitigated this candle. We didn't mitigate this candle, but it's not really compulsory for us to mitigate that candle. The major one that I'm most interested in is this one, the last bearish candle. That's what I'm most interested in. This is the last bearish candle. That is my point of interest. So now we go to the daily time frame. Let me outline this last bearish candle, the bodies of the candle. That's all I'm interested in. Price can go beneath the bodies of the candle, but that is my key level. That is my accumulation zone where I'm buying. So right there, you can see this is the bodies of the candle, and price mitigated the bodies of the candle. We'll go to the 1 hour time frame to see what that looks like. And on the 1 hour time frame right here, you can see this is where the liquidity ended. This is where the liquidity ended right there. So all I want to see is price mitigate that position. Once we mitigate this position, I'm looking for 5 minutes break of structure. If we do come this low, that will be perfect, amazing. If we do come and fill this one, the last inefficiency, that'll be perfect. If we do come as low as to mitigate the highs right here, that'll be beautiful. But I'm not expecting that. There's no certainty for that to happen because NAS 100 is very bullish. It's a very bullish pair. It's been very bullish from day one. So all we're looking for is a continuation to the bullishness. I'm not trying to sell it for any reason. Even when I see sell setups, I don't try to sell it because it's low probability. I'm always trying to buy it. If you're buying NAS 100 out of 10 times and you're really focusing on the bigger time frame and buying it 10 times, there's a high probability, high chance that 5 to 7 of those trades are going to end up in profit. So it depends on your exit position. If you're exiting between 1:3 to 1:5, 5 times out of 10 times, you're going to be in profit. So if you times that, risking 1%, out of that 5 times, you're making 5%. And if your risk reward is 1:5, that means you're making 5 times 5, which is 25%. And if you lose the remaining 5, risking 1%, you're down 5%. 25% minus 5%, you're up 20%. So this is basically how to do the maths in trading, because it's all probability. You're checking how many times this setup or trading this particular pair is going to be profitable for you, and how many times it's not going to be profitable, because no matter whatever pair you're trading, it's going to have times when it's not going to be profitable, and there's nothing you can do about it. You just have to still stick to your bias and trade what you see, trade your concept, and you will see the result eventually show itself to you. So far right here, I'm working with the 5 minutes break structure. We have an overall, this is my overall swing high on the 5 minutes time frame, my overall swing high, my overall swing low. I'm not really using this one in as much as this is a high and a low, but I prefer using this one because if you still invert the chart, this is something I just do in order to make sure I'm working with overall swing lows and swing highs. So if you invert the chart, you can see this is the overall swing low that created this overall swing high. So this is the low that I'm anticipating to see price break. If we break it, then I'll look for buys. We'll invert it back. This is the high. If we do break this high, then I'll be looking for buys on NAS 100. So that is my analysis on NAS 100. We're going to look at the S&P 500 as well, because I'm also watching a trade on the S&P 500. So we go from the monthly as well on the S&P 500. We'll have this inefficiency. We mitigated it. And then on weekly, you can see we'll have this inefficiency. I wanted to see a mitigation. And as you can see, price mitigated that position. We'll go to the daily time frame. And we'll have liquidity resting right here. I wanted to see price run this liquidity. We'll have inefficiency. Price came down, mitigated that position. We scale down to the 4-hour time frame. And on the 4-hour time frame, you can see all the liquidity, low resistance liquidity resting right here. Price came and wiped them out. So this is my key level that I'm watching very closely. We'll go to the 1-hour time frame. On the 1-hour time frame, right here, there isn't really so much to work with on the 1-hour time frame, but as you can see, price mitigated that position. So what I'm watching closely is to see whether there's going to be a 15 minutes break of structure, most likely a 15 minutes break of structure, because all my point of interest align with the bigger time frame, 4 hour daily. So I'll prefer to see if for a 15 minutes or a 30 minutes break of structure before engaging in the marketplace. And on 30 minutes time frame, you can see we'll have a high, a low. So all I want to see is a break of structure on the 30 minutes time frame. If I do confirm that, I'll be looking for a retest and then potentially take this to the upside, because I still remain bullish on the S&P 500, and we do have all this low resistance liquidity resting right here. So I wouldn't be surprised to see price eventually come to take the low resistance liquidity. So that is my analysis on the S&P 500, on the Nasdaq, on the US dollar, euro, USD card, AUDUSD. I'm bullish on all of them except USD card. I'm bullish on euro. I'm bullish on S&P 500. I'm bullish on Nasdaq. I'm bullish on GBPUSD. I'm bearish on USD card. So, and I'm bearish on dollar. So all I'm looking forward now is to see a shift in market structure on the smaller time frame. Once I confirm that, I'm looking for buys to get into the market. So that is my analysis. If you do have any questions, feel free to drop it in the chat. I appreciate you all for tuning in, and I'll talk to you in the next live stream. Have an amazing day, everyone.